Good morning, everybody, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I am here with my father, Carl Swenlin, and we're going to look at the charts that are interesting to you. We're going to deep dive into a sector or two, and Carl's going to give you his update on what's happening in the market right now. Before he does that, though, I do want to let everybody know that we are not registered investment advisors. So all trading decisions are your own. Anything you hear in this trading room or read in our blogs, none of it, especially when we talk about mechanical buy signals, sell signals, buy points and sell points, none of those should be considered calls to action. So we're going to run it. Carl's going to give us that market update. If you want to ask us questions, please use the Q&A box. And if you want to talk amongst yourselves, we do have the chat room open. Just make sure that when you send a comment that you use the drop-down menu above the comment to send it to everyone. All right, I think I've covered all the housekeeping. Dad, let's go ahead and get it started. What is happening in the market today?
Okay, I'm having trouble with my question and answer. What we have are some new buy signals are coming up. Right now, we're looking at the S&P 400 mid-cap, which is MDY for the ETF, and it should, unless we have a change in direction, right now it should be a buy signal by the close. Also, XLB, and I'm not going to switch to everything on that, and then XLP, which is the consumer
staples. You got it.
Right, and that is close. And the Russell 2000, which IWM, is also close to making a change. So they got some buy signals come up. One of the things that we should keep in mind, we have an election tomorrow, and I think the market is kind of stalled waiting for that to be over. We're not going to know anything until the market closes tomorrow, so I don't see any surprises coming out to make the market move either way until Wednesday. Okay, now I read Jared Dillion's free newsletter on MaldenEconomics.com, and he mentioned Meta as a potential, something that he was interested in. He was saying that it's really down, which it is. It's down over 77%, or it's gone down that far, and it's his comments made me take a closer look at it. He's saying that it probably will go down through the end of the year because they're going to want to dump that. Not going to want, the portfolio managers won't want that in their portfolios when theirs are published at the end of the year. So, but after the first of the year, it may be something to look at. This is not a recommendation, but what tempted me is PE is under 10. That's really undervalued for a tech stock, and it doesn't pay a dividend. The earnings per share are $10.50 a share. I mean, this is fundamentally, from that standpoint, it looks like a very good, something interesting. Again, it's sold off horribly. Everybody's scared to death of the metaverse that I'm not sure if it's launched yet or not, but they don't like the idea of it. And all I can say is on its merits right now, the company is making a very nice earnings per share, and maybe the metaverse will dig into that. But right now, I mean, they must be using they're part of their earnings to build the metaverse, whatever it is. And anyway, something to keep in mind. And again, not a recommendation. I just find it interesting with that PE that low for a tech stock.
So you were talking about the fact that we do have consumer staples getting ready to have a silver cross. So there is that silver cross on consumer staples. I will talk about what's on these charts a little bit more when I go through the sectors myself, but I just wanted to point that one out. XLE obviously looking very good. I'm still very much favoring energy, especially on this breakout. I think things are looking pretty good there.
Incidentally, I checked the 11 sectors, the S&P 500 sectors. I checked it just before we started, and 11 of the sectors have topped. Now, it's not necessarily a major top, but we have tops that look like this. This could be just a top above the top, on the way to a higher prices. But right now, it is in that topping situation. Okay, looking at the S&P 500, I've got, again, it's kind of stalled right now. And I'm just not going to pay much attention to it. But we've got a bottom above a bottom, and there's a top above this top. So it's a viable uptrend, and I might think I would want another top up here to really get it solid.
Rising wedge after rising wedge.
We had a rising wedge, and it broke down as expected. And this is the rising trend line that I'm following now. I leave these notations faded, but leaving there to see where we've been until we've well past it. And I wanted to look at the indicators as of Friday. Here we have our short-term Swenlin trading oscillator and ITBM, ITVM. These are short-term. These are intermediate term. And the intermediate term topped out, well, the volume topped out on Friday. And you can see here that the breadth portion has topped and then started up again. So it's a little shaky right there. As far as the short term, definitely backed off there, and you can see the prices followed that. This is a pretty reliable little indicator for picking short-term tops. We've got the US dollar index tried to break out of this descending triangle last week, but couldn't do it. And now it's headed lower, headed towards this line of support. Gold did really well on Friday. Went from this close to up here, broke out of this descending triangle, and we've got today we're just sort of holding pat. Again, I think waiting for the election to be over. I'm not sure that any of it's going to react heavily based on how the election turns out, but for now it's just holding tight. Oil, in a rising trend, we have a bottom above a bottom, a top above a top, but it's kind of threatening to do a little rising wedge here. But so far, if it tops out, then we're going to be looking at a rising wedge for that. Treasuries, snapping back to this declining tops line and moving away again. And long-term treasuries, in my opinion, are going to be going down for years. And it's going to affect the outcome of, it's really going to affect the way that portfolios are managed. 60-40 system, I think, is out the window. That's what they've always used because it worked fairly well. And now, because it 60-40, 60 stocks, 60% or 40% bonds, and when one was going up, the other would get down, and vice versa, but it kind of stabilized portfolios. Now, bonds are going down, and they're going down in the long term, and that's going to affect everything.
Bitcoin, we got to do Bitcoin. There's always people looking for that.
Yes, you're right.
It's actually been looking pretty interesting with a breakout of late. I'm kind of curious what we're looking at now after weekend trading.
Right. We've got looks like a new point of resistance here. Historically, not necessarily so, but certainly at this point, it's in a rising trend from this low, and it may be going higher. Long term, I think it's seen its day. You know, look at the long-term chart. This is 2 years. You can see this is where it went from hardly anything and up to its all-time high. And right now it's basing, possibly going to last in this area for years, and maybe will recover. I don't know. But right now, it's not looking promising. And the 10-year bond, right, it's in a rising trend, as you can see, still waiting for a new top, a new high prior to last month's top, above last month's top. And, as far as interest rates right now, I mean, I see nothing but rising trends. We may get some pullbacks like we saw earlier this year, but I think in the long run, we're heading higher on rates.
I have to agree, especially when you look at the technicals. It seems like it's time for interest rates to start topping out and correcting, but everything that is showing up on these charts are rising trend after rising trend after rising trend. So
right. And a couple, news item I wanted to mention, something we're not hearing much about, but when it drops on our head, we're going to know about it. But got 2 strikes pending out there. Maybe they'll strike, maybe they won't. But pilots and a rail strike. And you can pretty much guarantee that the longshoremen will pile in on top of that if those 2 strikes.
Right.
So not something that's that's not good news, and it could really throw a wrench into the machine. Let me see if I've got any questions here.
Oh yes, good idea. There is one. It says question for Carl.
Yeah, how does the current upturn different from previous false upturns in this 2022 bear market? What makes this one viable while others weren't? Well, as I said at the beginning, we're in a period of favorable seasonality, which 6 months of favorable seasonality, and we're and I can't remember the sharp list I had, but it's right. It's we had favorable readings on our indicators. Oh, sentiment is one that's really still bearish, and is going to help any kind of a rally as people get caught on the wrong side. Do you think we have bottomed like many believe, or is this just a year in rally? I don't think in the long term we've bottomed. We're not headed for all-time highs, but that's just my opinion. And because of the fact that the market is still grossly overvalued, among other things. And the fundamentals out there, we're just looking at a terrible time to be looking for a bull market.
Just doesn't seem yes, with all of the things going on between inflation and jobs and the economy and the globe, it's just not really fertile ground for a new bull market. I mean, it just isn't. There are too many things going on, but certainly in between times, you're gonna see rising prices, and that's exactly what we're seeing now. And of course, question is, how long is it going to be able to push higher? But as long as we keep holding support levels, as long as we keep having breakouts with textbook pullbacks, with more, upside potential here, like we're seeing. Well, I have to say, I don't like those filled black candlesticks that we saw Friday, and so far we're seeing today. Those are bearish candlesticks. So we don't want to see those. Typically, a filled black candlestick will lead to lower prices. But as you can see, it's not in always.
I wouldn't want to see last week's low taken out. That would be an immediate, caution flag for me. But look at the PMO. It's topped, but I think it's going to bottom above the signal line, like it did back around July-ish, and then take the market higher. Just
there we are. No, it looks pretty good. I know that both of us on this big decline were really concerned about that PMO topping below the zero line, but seeing this recovery already happening on, like I said, these kind of these filled black candlesticks that are a little bit suspect, but the fact that we're getting even just this little bit of rally here and it's already turning things around. And then one of the things I've been talking about, Dad, and I don't know if we've actually had the discussion, but the fact that, we talk about everything being so bearish, but when you look at the VIX, traders aren't bearish. Like, they're not really scared. I mean, the fact that we had these 3 very heavy declines and the VIX didn't really go anywhere. I mean, it was still kind of at the same levels as it was on the way up. So to me, it seems that traders aren't that bearish right now, and that honestly could feed the market and move it higher. I think there's enough people out there that are just sort of, as you said, kind of camping out as we wait for the results of the election.
Right. That's probably the best sentiment indicator there is.
Mm-hmm.
And that's how high it is. Now we have a reverse scale. So the higher the VIX is on this scale, means there's more complacency. So
exactly.
Right now, it's not super complacent, but geez, it's certainly better than it was last month.
Yeah, I mean, you can see that we were sitting below that moving average, but the fact, like I said, I just was so shocked when I was sitting down to do some of the writing last week and seeing those big declines and the VIX just really sitting still. So I think there's more upside just on the fact that people aren't that bearish, that they still are interested in buying, that at this point, we're just sort of waiting to see what's going to happen moving forward. All right, 9:22. I'm going to get started on some sectors. Are you good, or was there any questions that you wanted to address?
No more right now, no.
Okay. I did get a question on candlesticks, so I'll give you my really quick notion. So red candlesticks versus black. So red candlesticks mean that you finished the day lower. Black candlesticks mean that you finished the day higher. So that's pretty much there. The problem is now, right? What's the difference between a hollow red, a hollow black, and then filled red and filled black? I could spend a lot of time on this, but mainly with a candlestick, the top of the candle is the intraday high, the bottom of the candle is the intraday low. The color of the candle is determined by the open and the close. So if you ended up closing lower, you get red candlestick. But then if you end up closing below the open, which is especially bearish, then you're going to fill that candlestick red. But if you find that the open, you finish higher than the open, it happens to be lower than the day before. But if you finish above the open, then it's hollow. So it's a similar thing with the black candlesticks. Filled black means that it's higher on the day, but it's below the open. So there's some bearishness going on. So you have to fill that candlestick. The hollow black ones, you're good. You closed above the open, you closed above the day before. So hopefully that little quick discussion will help you a little bit understand candlesticks a little bit more. I've started studying them more now that I've moved more into a short-term trading time frame, because always remember, candlestick formations are basically one-day patterns. They're not going to necessarily, you can have these pivot points and reversals, but typically, they're really a one-day pattern to give you a little bit of a clue as to what might happen the next day based on who's winning the day, the bears or the bulls. All right, long story short. Ish.
Yes.
So, all right. So let's go ahead and look at the sectors here and get a peek at what ones look the best. We're going to start off right off the bat with our candle glance. All right. So these are all of the 11 sectors, and it gives us a really good idea by looking just simply at the PMOs, which are on the bottom, which ones are, looking more interesting, which ones are showing new momentum. And of course, I look at this, and the first thing I notice is two sectors that look particularly bearish, which would be comm services and discretionary. We have a new PMO sell signal that is lining up on consumer discretionary. Notice that we also have that PMO topping beneath the zero line. So all of this is very, very negative for consumer discretionary, which is what we're looking at. Stochastics are looking interested in maybe turning up. But again, seeing that sell signal well below the zero line, big problem. Participation isn't that bad. We've certainly seen worse numbers. But overall, this still has a very bearish look as far as participation above 20, 50, and 200s. Silver Cross is rising, but less than half have a 20 above the 50. We didn't talk silver and golden cross, so I'm going to do that very quickly. They are our premium indicators that are on our website for those who are our members. The silver, let's go with the Golden Cross Index. A Golden Cross, as most people are familiar with, is a 50-day moving average moving above the 200-day moving average. For the Golden Cross Index, we use EMAs, and it tells us how many stocks, in this case, in XLY, have a Golden Cross. How many of them have a 50 above their 200? Less than a quarter of them. So that tells you that more than 75%, more than 3/4 have a bearish configuration on their charts, or they're in bear markets. Silver Cross, same idea, only we use the 20 and 50-day EMAs. So this tells us how many stocks within that index have a 20 above the 50. And if you don't have your 20 above the 50, you're at pretty much the very least, you're more than likely correcting. So we want to see more and more of those 20s above the 50s. So yeah, we're at a place where we could see a pivot here on consumer discretionary, but being a more aggressive sector, I would still be very careful with it. XLC, as we were saying, also having that negative crossover on the PMO well below the zero line. Broken support here. Can't even see the next level of support. You have to go to a weekly chart just to get an idea, because even in a 2-year chart's not going to show you the support levels. Right now, key support would have been here, which we know we have broken. Next area of key support, kind of a zone right in here. If you're looking at this low and these lows, sort of a support zone where we could see something. But the primary support line is all the way down here at about 37.50. And I don't see any reason based on this chart, based on the other, that we couldn't see prices move that low for comm services. Probably a lot of it having to do, Dad, I'm guessing, with the Facebook Meta situation.
Right.
I'm going to go back to our candle glance. All right, so two bearish sectors. Which ones are the bullish sectors? The ones that really caught my eye last week, number one was materials. I love seeing that PMO bottoming above the signal line. I think that's especially bullish. Energy still looking pretty good, but consumer discretion or consumer staples, as you were talking about, we're getting ready to have that 20-50-day positive crossover, a silver cross. PMO rising, starting to accelerate. And you can see that we have fairly decent participation under the surface, rising GCI, rising SCI, stochastics turning back up. I think this looks like a pretty promising area here going into the week for consumer staples. And then let's look at that materials chart very quickly. Nice breakout from that longer term declining trend. Again, PMO looking like it's bottoming above the signal line there. I don't think it actually turned over, but certainly accelerating higher, not completely overbought, certainly getting close to being overbought, but in the grand scheme, it's really more of a +4, -4. So I think we still have some upside headroom for the PMO. Stochastic starting to turn up. I like materials, but we have to consider the fact that with materials, we're really tied to the dollar here and gold. And the dollar's looking certainly soft. We looked at the UUP chart. Looks like it's going in for a breakdown, but boy, I've been thinking that every single time it gets lower and then it manages to rebound. So if gold doesn't do quite so well, I think we're going to have some problems with the materials sector. It's certainly looking up. I'd like to see it break above that 200-day EMA. I think that would give us a really great high sign signal. All right, continuing through financials, looking pretty good. We do have that breakout above the 200 on financials and accelerating PMO. We have the stochastics turning up. So I'm liking the look here on the financial sector as well. PMO not overbought. Would like to see, again, more participation, but it's still healthy enough. We're near the top of the zone here for the participation. And the silver cross, let me add that Zoom thumbnail. The silver cross is bottoming above its signal line. So financials are starting to look more healthy and looking pretty interesting here as well. XLK, I was just noticing it out of the corner of my eye. It had that look on that chart on the candle glance that PMO was turning up above the signal line, but that's not actually happening right now. And you can see very low participation. If the market's going to be soft, if we're going to start seeing some struggling on the way up, this isn't really going to be the place to be. This is the place to go when we had that bottom, when we have a stronger looking market, a bear market rally that's looking a little stronger. That's the place you want to go, because those growth areas, that's where, you're usually going to see your biggest percent moves to the upside. But right now, I think XLK is a little dangerous. I'd probably be staying out of there unless you've got some stocks that just in particular look great. XLI rising nicely, no breakout just yet. And XLRE, money seems to be coming back in there. Looks very similar to what's going on in the SPY. And if the SPY is looking a little soft, like it is, probably don't want to be in the XLRE. And utilities starting to top. And as you noted, Dad, I'm pretty sure you were talking about this chart. We do have that big breakdown now below the 20-day EMA. PMO hasn't topped, but starting to look a little bit soft here. Next level of support would bring it right back down here. So let's see. We're looking at a decline of about 3%. That's probably on the way for utilities. All right, so that is our sector look. I'm checking my time, so I make sure I have plenty of time for looking at the industry group, or I mean the symbol requests, get my head around this. But let's go quickly to the energy group. And I want to go into the energy group because we did have a question about LNG, natural gas transportation space, you know, in the energy space. So let's just go right in here quickly. And I'll show you really where we're seeing some really nice movement. So oil and equipment services, this one you can use the ETF XES to play oil equipment and services. And I really like the look. I think we're still headed higher. We don't have the breakout yet, but this was an area I pointed out to my subscribers of DP Diamonds last week, and certainly seeing some follow through. I'm really liking it. Integrated oil and gas breaking out, which is great, but the PMO is starting to get just a touch overbought, but we've seen it get further overbought, now seeing an acceleration upward. Exploration and production, certainly doing well again, up here at overhead resistance. I was liking pipelines quite a bit. We had the new silver cross. Looks like we're going to get a golden cross here soon, and plenty of upside potential. UMI is a symbol that you could use as ETF for the pipelines. And coal starting to look really interesting. That was something I pointed out to subscribers on Friday, that particular industry group was looking ready to break out. Sure enough, I actually was right. I love that. PMO rising and accelerating, and you can see stochastics now above 80. If you go into that group, there are a couple of interesting stocks for coal. BTU is one that I was looking at on Friday, and you can see up 9.45%. So those in my diamond mine were pretty happy, I'm certain, if they did end up getting right in there. METC was another one that I also liked moving forward in the coal space, and you can see nice little breakout continuation on that, nice follow through, and everything really lining up on the chart well. So LNG, that was what was brought up to me, the natural gas. So let's first look at UNG, and then we'll look at some of those transports, the LNG type symbols. So you can see natural gas. This one was on my ETF list last Wednesday for subscribers, and you can see beautiful gap up. I did mention it was kind of a high risk play because it is a volatile ETF. So you always want to keep that in mind, but really nice bottoming formation. And now we're seeing basically a reverse island playing out. Big gap down, pretty much consolidated that decline. And now we're getting the big gap up. So nice reverse island situation here. Would like to see the breakout above that 50 and 200. If we don't get that breakout above the 200-day EMA, we will be getting a death cross on UNG, but I have to say the chart's looking pretty good here. So LNG, this is in exploration and production. This is more of the US version. I am believing in the natural gas space. Not a fan here, but I do see some interesting choices here in marine transportation. And you can see DLNG, which is a marine transport. This one I was looking at this morning when I saw your questions. And so what stands out as a good one? I like DLNG. Really nice move today, breaking out above this area of overhead resistance. Still having a little trouble here at the 200-day, but you know what? An over 6% rally. I can't really ask for much more as far as getting above the 200 on the day. Looks like it's getting ready to head that direction. PMO accelerating higher. Relative strength looking very good. Stochastics And the other one that I was looking at in this space was FLNG. Another one, kind of a cup shape here that we're getting on this move upward, that rally, nice basing pattern with that cup shape, really calling for a breakout here with the PMO bottoming above the signal line, stochastics just about above 80. And then again, relative strength. Didn't talk about relative strength, but the top one here is the group compared to the S&P. The next one is the stock compared to the S&P. And then the last one tells you, do you have a leader in the industry group? It's the stock against the industry group. So we want to see rising relative strength. That tells us we're looking at a outperformer within the group. And so that's one of the ways that I can test that. So FLNG also looks good. So there you go. 2 for your energy watch list in that area. So let's go ahead and move forward. I would say now let's jump into some of those symbol requests, and we'll try and pop through as many as possible.
Okay. You've done it. Okay. Tesla.
Oh, everybody wants to know about Tesla. All right. So I've added a thumbnail to the chart so you guys will be able to see that. But I'm also adding the events. So you can see here, that was when we had that 3-for-1 split. And just a side note, you'll notice on a lot of charts, and I think, Dad, you'll confirm this hopefully, that when you get these splits, typically you're going to see prices move down. It's not usually a good thing for the stock. You usually are going to see a move to the downside. This is, of course, I think more related to the bear market, but just something to keep in mind when you know your stock's getting ready to have a split. All right, Tesla looking particularly ugly. This looks almost like a short opportunity. PMO turning down well beneath the 0 line. And right now we do have a negative crossover, a PMO sell signal. Look at the relative strength just falling off the map here. So even if you were feeling good about the automobile space, this is a bit of a problem here. So I wouldn't be looking at this as a move to get inside. You go into the weekly chart and you can see this is really important support. I'll let you take over really quickly.
Okay, Tesla, the weekly, you can see it's a major rounded top there, and probably going to go lower. I have an opinion about electric cars in general. I just think it's a fad. I mean, I think they will last. We're going to have electric cars in the future, but at the current level of the technology, I just think we're going to find out we're not quite there yet, and they have a lot less viability than people want to believe that they have. That's a personal opinion, and I think this chart, this rounded top, is proving that.
All right, excellent. So, okay, so next one up.
Oh, sorry, QQQ.
We actually have much better look at this one. So let's see, where would that be? QQQ.
You're you have it on your screen.
Yeah, we'll just do this one. Here we go. All right. So with the QQQ, we are seeing that support level, but remember we looked at that technology chart, and while this is a good spot to see a reversal, note that this is the volume moving average. This is not a support level, so don't get that confused. We do have a PMO sell signal on the way. QQQ, again, I think that we are in this bear market rally, but it's not being carried by the big mega caps necessarily, and it's not really being carried by the technology sector. So QQQ, I would be really careful of. I know that we are ready for that move upward. We look at the weekly chart. This is pretty strong support right here. But the strongest support really lies here at that 2020 top. So I think we're still vulnerable to more downside in the 11 to 12% range. So not necessarily going to happen right away. We do have kind of looks like a falling wedge, which is bullish, but ultimately this isn't the area of the market that I would be paying that close
major
attention.
Rounded top, and it just looks horrible. I do not think that the 2020 top support level is going to hold. I think it's headed much lower. This is just part of the bear market thesis, is that we've got much further down to go. And obviously the tech heavy QQQ is not the place you'd want to be right now.
I absolutely agree. So yeah, next support though is going to be coming right around there. So we'll start looking for that pivot, but we could see a pivot right now. Again, bear market rallies happen, and in the context of a much greater bear market. So I'm totally in agreement with you there.
Okay,
this is the next, that's the possible next stop.
Yeah. Thomas wants to know about FGEN.
Okay. I did see IWM in there, so I'll just give a quickie. I've actually been looking at the small caps. I like what I'm seeing, kind of this cup shape, pull back here on the handle, starting to move up, 20, 50-day positive crossover, silver cross, stochastics turning up in positive territory. I think that the small caps aren't a really bad place to start looking. And honestly, not sure if any of you have heard about this, but typically when the dollar is rising, you're going to see a little bit better movement out of the small caps, because typically they're not involved in a lot of global kind of business where a rising dollar kind of hurts those large caps, where the small caps are, not that they go unscathed, but certainly they're a little more insulated.
Okay, FGEN.
Pharma. Healthcare, we didn't talk much about healthcare, but I think it's still fairly strong. The biotechs, pharma have been really strong. You can see with pharma really holding its own. This particular one is traveling kind of in line with the group, but that hasn't really helped its performance against the S&P. So right away, I'm a little bit skeptical. Of course, a PMO sell signal is just not going to make a stock interesting to me. If we're talking about a possible reversal coming up here, I don't see it. I just don't see enough strength on this chart. I would be looking elsewhere in the pharmaceutical area.
Okay, PLTR.
Palantir.
Buy more at low, sell or hold current position.
Okay. Ooh, I'm sorry that you're holding it right now. Big breakdown below that support level. I think this is going to be requiring a weekly chart, but honestly, I don't think that I would want to have this much longer after that breakdown. I think, yes, you might get a snapback to the prior support line, which might give you a little bit better of a way to get out. What are we talking about here? I mean, you might be able to grab, 2 or 3% off of this loss, which isn't very much. So I don't know if it's worth hanging in there just to see that loss become a bigger loss. But we do have support here, so I can see your point. What is that risk?
What's the weekly look like?
Yeah. Downside risk is about 6 to 7% just to come test this support level. So something to consider there. Weekly chart.
Yeah.
Yeah. I mean, it is, this is solid support. I mean, if you want to call it that, it's kind of a new issue, but I mean, I could see a reversal coming here. I just don't see it happening yet. I mean, it's the software, it's in tech. It's just not, you know, I'm guessing this was due to earnings, which might change my opinion on it a little bit. Yeah, they reported earnings. So, oh no, that's not Palantir. I'm looking at the wrong one. Yes, they reported earnings before the bell. So this is an earnings problem. You know, you can get a reversal off this, but a lot of times you're going to see continuations. So you might get that bounce as, you know, like I said, you might get that 2 or 3% bounce on the day tomorrow. But honestly, you need to keep an eye on the 5-minute chart here. See if there's any possibility, or even a 15-minute chart. Is there any possibility we could get that move upward? I just don't see it on these charts. The PMOs are down. You're taking a big risk here. I know it sucks, 12% decline, but I in good conscience, I can't say, yeah, you should just hang on to that.
Okay, BWXT.
Okay. BWXT. There we go. You know, we got the breakout. We got the pullback toward the breakout point, starting to move back up. Let's get a better look at the PMO and events. All right, so paying a regular dividend, not bad. I mean, this wouldn't be on my list of things to jump into. I think it's certainly viable because you do have the PMO turning up above its signal line. You also have a positive RSI. You have stochastics that are still in positive territory. This is a bit of a problem for me about jumping in new here. And that is that it's not performing that well against its group in comparison, you know, again, to the other stocks, its peers. So that tells me you could get something a little better, but this does have that flag momentum look breakout, but I don't know. I mean, I like industrials. This one, I think it would be okay. I don't like it as, you know, I don't think it'll be great, I guess is the best news here. 5-minute chart, you can see that we're trying to get a buy point PMO, 5-minute PMO crossover, positive RSI, 5-minute RSI. Those are your entry points. We had that already. Looks like we might get another entry. So, I mean, it doesn't look terrible on the 5-minute. It's certainly something you could consider. I just think there might be better choices out there.
PSTG.
Yeah. That's the weekly too. So kind of a breakout, pretty nice upside potential. So might be worth it. All right, next one, PSTG. Keeping an eye on the clock. Another technology. This looks like a pretty much textbook flag formation, but I do know it's in tech. So, and you can see that this group is really struggling here. You can see that this one's doing well against the market and certainly is an outperformer within the group. It certainly better be if this is what we're looking at for performance on computer hardware. Like I said, I think what it's got going for it is that flag formation. Let's get that default thumbnail on there. And you can see that the PMO is starting to accelerate off of, it's not breaking out yet. Maybe you want a little confirmation on a breakout from that short-term rising trend here, but it's interesting. Stochastic's still not really confirming what the PMO is telling us, but PMO is giving us the scoop. Let's look at the weekly. Yeah, I think that this one is not bad at all. Look at the PMO. The weekly PMO just gave us a positive crossover. Weekly RSI positive, nice scooter. I think this is a pretty good looking chart, honestly. And entry point, not now. You've got that 5-minute PMO having that downside crossover. If anything, this is a sell point. So if this were interesting to you, start looking for it to get down to that $30.45 range and look for a PMO that starts to turn up. I think that could be a pretty good entry.
Okay, mRNA.
All right, Moderna, and then I see right under that Lilly. So we'll look at those real quick. Nice breakout above the 200, Eric. Nice choice. RSI looks good. All of the things, he's a diamond subscriber. He knows what to tell me to look at because he knows what I like. And I like this chart. I think Moderna is looking pretty good here. Weekly, it's in a trading range. It's about halfway up through the trading range, but if it can get to the top of the range, that's a big 20% gain. So I like the look of this. Look at that weekly PMO giving us that positive crossover. Let's go look at Lilly and see whether we like that better or worse. I would say, given the choice, I prefer Moderna. We do see new highs getting on here for Eli Lilly. And I'm not saying the chart looks bad here. I mean, certainly stochastic's turning up above 80. Let me get that default thumbnail on there. Yep, PMO accelerating a little bit more higher, I think, relative strength. But ultimately, I have to say, I kind of like that Moderna chart better. Looking at the weekly, again, making new 52-week highs, so nothing to sneeze about. And obviously, StockCharts technical rank in that hot zone above 70. That means that if it's above 70, that it's in the top 1/3 of all of its universe. In the case of Eli Lilly, that universe is large caps. So in terms of the large cap stocks out there, it is in the top 6-7% as far as trending conditions. So I like this chart too. I think we're good.
AFL.
Nice breakout here. There's that overhead resistance that we're getting a breakout from as well. PMO getting a little overbought, RSI already overbought, but looking at stochastic staying above 80, this one might stay overbought. It's one of those that I like to call the winner that keeps on winning. Look at the really nice relative performance here against the S&P. Let's get the thumbnail on here. It's paying a decent yield. Dividends are coming out regularly at 40 cents. That looks good. Yeah, I like this look of Aflac Life Insurance Group. I kind of remember talking about that in Diamonds a couple weeks ago, I think. Nice breakout there. I like the look of this chart. I think Aflac's looking good, and it is in that financial space, which, if you recall, that sector chart was starting to look pretty good as well. Run to a 5-minute and no entry. PMO is topping and having a negative crossover. Looks like a rising wedge. Probably could get a better entry today on a pullback, but ultimately, I think the stock's looking pretty good.
Okay. NVIDIA versus AMD.
All right. This or that is like what I call this. So what I'm primarily going to do is not only look at just the pattern and the price, but the this or that comes a lot from the relative strength against the group. I like this cup shape that we're seeing here, getting a bit of a pullback here after this breakout that we had on Friday. So that's a natural thing. PMO just getting above the 0 line. RSI looking positive. Stochastics looking great. So I have to say this one looks good. Be careful in the semiconductor area. They're very sensitive to what's going on in the market. And you did mention all of the perfect storm of the unions and
right.
Yes, the strikes and
right.
things like that. And that, I think, would really hurt the semiconductors as well. So just keeping an eye on that. But NVIDIA, that looks pretty good. But what does AMD look like? So look at the relative strength. It's more trending lower. It's hit overhead resistance. It hasn't broken above it yet in a declining trend. I have to say, I mean, I'm not liking this AMD chart as much as the NVIDIA chart. You can see it broke down below this level of support. It's trying to regain Weekly PMO still moving downward. Did we look at this one? Yeah, look at the difference in the weekly PMO from NVIDIA to AMD. I think it's a pretty obvious this or that NVIDIA looks better. All right, we've got about a minute left. See if we had any.
LNQQ.
Let's see. LNQQ, okay. I do know that somebody says, if I sign up for both subscriptions, what do you get? Do you get buy and sell text alerts? Currently, we don't have text alerts running. We are looking into doing something like that to give you an idea of when to get in and out. Not on the 5-minute charts. We don't have that capability, but certainly we can give you notice when the PMO is making changes, but not there yet. If you do sign up for a prescription or subscription, let's go to here, and I will still look at that one chart, I promise. Okay, so what you're going to get is the DP alert and the DP diamonds. This is our overall report, tells you what's going on in the market. Basically what Carl did at the very beginning of the program, that's our DP alert. DP diamonds is what we're doing now. It's a stock picking newsletter. That's where I let people know what sector to watch, what stock picks I'm looking at, etc. I do have an ETF day for DP diamonds, so it's not all stock related. All right, I promised LNQQ, so we're going to go do that. And then we'll close it out. But definitely come check our website out. Oh, maybe LNQ. Nope. Sorry, Larry, you must have put it in there wrong. Maybe INQQ is my last try. Aha, that must be it. That must be INQQ. All right, so super thinly traded. So right out the gate, when your 50-day moving average of volume is 827, that's something to consider. It's very illiquid. So I wouldn't be in it just for that fact, just to be honest, Larry. But if we're talking technicals, it is holding this support level, but this does look kind of like a descending triangle a little bit, flat bottoms, well, maybe a falling wedge. Overall, I'm not really that impressed, but you do have stochastics doing what they're supposed to. It is starting to outperform. Weekly chart on this one. Yeah, I'm not really that thrilled with this one. It's just a little too new of an issue and not enough trading. Sorry about that, Larry. All right, I think that covers it. I'm going to stop our sharing and thank you all for being in the DP trading room today. I hope you enjoyed it. If you want to join us live, if you're watching the recording, you'll find the link under the YouTube video, or if you're watching on StockCharts TV, click on DecisionPoint.com and you'll find the link right on our homepage to register to be here live, ask your questions, and send in your symbol requests. And with that, we will say good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.